The broadcast is now starting. All attendees are in listen-only mode.
Good morning. Welcome to the Texas Mortgage Banker Association's 2024-2025 Educational Webinar Series, a part of the Education and Endowment Committee, led this year by co-chairs Hannah Barton and Stephen Bertrand. I'm Bryan Walker, and I'll be moderating today's webinar, Strategies for Growing Builder Business, Insights and Technologies for Lenders. This webinar should take about an hour, but feel free to ask questions throughout the webinar using the chat questions window. As always, if you have additional questions, you may email at the email address on the slide. I'm Bryan Walker. I'm the Director of Business Development for Zonda, helping lenders identify builder opportunities in their markets. I've enjoyed 30 successful years in business development, starting with Dell Computer Corporation, doing Fortune 100 hunting in Sydney, Australia. Feeling homesick, I came back to the States as a hunter with Microsoft for Fortune 2000 in Chicago. When the tech crunch hit, I moved into real estate with Keller Williams in Houston, Texas, quickly becoming a top agent and certified trainer for KW University. I expanded my real estate career with a development and construction project in Bastrop, Texas, until wildfires wiped out the entire community. I then decided to move into the financial part of real estate, where I became the top development rep for mortgage originators for a regional bank. I am now the top producer at Zonda, where I can combine my experience in tech, real estate, and mortgage to help loan originators grow their business. Today, we're joined by Nicollette, my friend and boss. She is the Senior Vice President of the Mortgage Division at Zonda, where she also helps lenders grow their business with builders. With over 20 years of industry experience, most recently having launched the National Builder Division for a prominent mortgage company. Nicollette is a well-respected thought leader, published author, and valued industry partner. Let's get started.
Hello, everyone. Thank you, Bryan, for the introduction. I'm so happy to be here today in order to talk to you a little bit about strategies for growing builder business. We'll give you some insights and techniques in order to be able to do that effectively. So let's go ahead and dive in. But before we do so, I did want to note, I know that Bryan had mentioned making questions in the chat. Please know that if we don't have time to address all the questions at the end, we will reach out to you to make sure that those questions are answered. But just know that if I don't immediately answer the chat, we'll get to questions at the end. So with that, let's go ahead and get started. What we can expect today's session is a couple of different things. We're going to start out first with the why. Why market to home builders, and why is it important, particularly in this market? Now, if you're going to market to builders, there are 5 things that you need to know, and we're going to break those down as well. We're going to talk a little bit about prospecting efforts and what that looks like in terms of marketing for turndown builder business or preferred builder business. Then we'll talk a little bit about leveraging your own tools, maybe proprietary loan programs, marketing support, and of course, Zonda Mortgage. And then at the end, like I mentioned, we will open that up for Q&A. So let's start right away with the why. Reason number 1 is resale inventory is still near historic lows, and truly builders are the future of increased supply. One of the things that we talk about is new construction and just how big of a piece of the pie it is in the market. So currently on a national level, more than 1 of 3 homes for sale is new construction. Interestingly enough, Texas is really sort of the mecca of all new construction. In fact, about 21% of all homes being constructed nationally are being built in the great state of Texas right now. So that is 1 out of 5 homes in the United States. So again, if you're going to be doing builder business, Texas is certainly a great place to start. Now, when we talk a little bit about resale listings, we know that we're starting to see a little bit more inventory start creeping up onto the market, but we're still in critically low levels. So in this chart, you'll see that we've got the yellow line representative of 2024, The blue line is representative of 2023. And so right now, as we look at new listings, we're just at about 96,223 with a year-over-year increase of only 5.8%. And the reason for that is really that mortgage lock-in effect is still real. Sellers are hesitant to give up that interest rate in the 2s or the 3s in favor of one that's in the 6s or the 7s, essentially asking the consumer to double or even triple their monthly mortgage payment. On a positive note, though, I do want to say that Texas really has seen more of an increase of resale supply than in some other markets. So some positive news there. But let's talk about what that resale inventory looks like. And if it were to really increase 10, 20, even 50%, when we look at these levels, we will see that at 50%, we're still underneath the threshold of what we were in 2020. So we need a lot more inventory on the marketplace in order for resale inventory to even make a dent in what the consumer need is out there. Now, in terms of lockdown effect, I want to sort of point out this slide, which basically talks about sellers creating buyers, and sellers really still can't make sense of moving. Now, there are some little caveats that we'll talk about a little bit later, but in terms of just your vanilla seller, when we look at the market, we can see that a significant amount of buyers have a rate below 5%, 80%. Of buyers. Now, you can also see that 66% of buyers, or 2 out of 3, have a rate in the 3s. That is something that is really hard to overlook because even when rates come down to the 6s, if you've got a rate in the 3s, you're really doubling your mortgage payment in order to get a very similar quality of house. And that's something that home builders have been looking at. It's something that realtors have been looking at, and certainly the mortgage customers. But interestingly enough, we can see that over 1 out of 4 have a rate in the 2s. And that is definitely something to be aware of. So certainly as we look at refi opportunity down the road, but we also look at, what is the logistics of really being able to sell your house. I thought I'd share this because there really is this sort of free money mentality that exists in the marketplace. For example, my house is at a 1.99% interest rate. And I was actually telling Stephen on the call a little bit earlier that we're having construction done on our house right now. We're putting in these 20-foot sliders and it's amazing. But the reason we're doing that is because guess what? I'm not selling my house. I have a 1.99% interest rate. So rather than sell, I'm going to go ahead and maybe make some improvements. And I think you're going to see that a lot across the board. Now, for the people who really do want to move, they are doing something different as well. They're tapping into the equity of their homes in order to be able to buy the house that they want and then renting out their free money house in order to help subsidize the cost of that higher mortgage. So certainly there is some opportunity that's out there, but if you look at the state of Texas, 55% of buyers have a rate in the 3s. And that's something, again, to make note of. Now, I mentioned a little bit earlier that you're going to be able to see move-up buyers tap into that equity without selling. And so if we look at some of the major markets across Texas, Austin, Houston, Dallas, San Antonio, you'll see that those median price increases since 2019 are in Austin 64.7%, Houston 38%, Dallas Fort Worth 45%, San Antonio 40%. And so people are really able to sort of take that equity and put it into the house that they want to without having to necessarily sell the home that they're living in. Now, a point to maybe note here is that, last time there was a rate difference of the 30-year fixed and that outstanding mortgage rate of where it is now, it took about 10 years in order for the market to really balance out. And so for us, it's sort of something that we look at as saying, this could just be the beginning of a very long seller strike. And that's what makes new construction that future of supply. So it's really important to, as a lender, sort of understand the overall market and go, wow, if there's not necessarily a lot of resale opportunity, how am I going to establish purchase business with referral partners? And so those that survive don't do so necessarily by being smarter or stronger than their competition. They do it by being adaptable. And so if you've not done builder business in the past, maybe it's time to sort of shift and pivot and learn how to do it. And that's sort of what we're here to help you do at Zonda. Now, I mentioned reason number one being resale inventory is limited. And so let's talk about reason number two of why it's important to market to builders. And that's, RIP refis. They were awesome during COVID, but certainly now we are feeling the effect of all of those refis because, again, there's not a lot of opportunity out there with those 2%, 3%, 4% rates. So again, without resale business, without refi business, if you want to originate loans, it's time to pivot and really focus into doing the new construction. Now, number three, to market to builders, opportunity knocks. When we look at the opportunity to work with home builders across the country, it's significant. So we've got over 30,000 unique builders that are actually closing on homes in the country right now. Now, I mentioned that Texas is a huge opportunity. You have 3,300 unique builders that are closing on homes in Texas alone. 3,300. I mentioned earlier in the discussion that 1 out of 5 homes is being built in Texas, and so I think that's obvious to see when you look at the sheer amount of home builders that are active in your market. Now, number 4 reason to market to home builders would be that the business of prospecting referral partners has really changed. And I think that's going to continue to change. It used to be for people who've been in the business a really long time that used to be able to just sort of go and put a realtor in your bucket every month, and sort of after a while, you're going to have a good solid 20 to 25 realtors that are sending you business on, somewhat of a regular cadence. And that sort of changed mostly because of technology and the sort of Amazon effect. Back in the old days, people would sort of call their realtor and ask for a referral on the loan officer side. Well, now today's consumer many times is so savvy on the internet, they're not afraid to share their information or get a pre-qualification ahead of time. And so many times before they even call the realtor, they've been pre-qualified by an internet bank or something else on those lines. So I think if you're looking for realtors, you have to have 5 times the amount of real estate agents sending you buyers than what you used to, just to be able to get the same amount of business. And with builders, that's not the case, right? Builders are still able to control where that deal goes. Why? Because there are usually incentives tied to it. And I get this question a lot from lenders of saying, well, isn't it a RESPA violation for a builder to control where the deal goes? And the reason that this hasn't been ruled a RESPA violation in the past is because a builder's ability to provide quality service to a buyer and close on time is very much impacted by their lender of choice. So imagine if you're D.R. Horton or Lennar or any of these other large builders, and you're trying to close 3,000 homes in Texas in a month, and you have to follow up with 3,000 different lenders. Well, for them, it would be very difficult to scale their closings. And so it really has been shown that it's been beneficial in many cases for not just the home builder, but for the buyer, for them to be able to sort of control pipeline management so that things close on time. And so I want to sort of address that because I think it's something that's talked about a lot and is probably misunderstood, but the whole reason behind it is really sort of to help protect the consumer in terms of making sure that, they're able to move into their home when they're supposed to be. Now, that being said, if you can't beat them, join them, right? So if you're tired of losing business to a home builder lender, start to learn how to do builder business so that you can be your own preferred lender, right? Or be in that backup position. And then lastly, and maybe my most favorite reason, particularly if you ask my husband on this, is why to market to builders is, Neiman Marcus is much more fun to shop at than Target or Walmart, right? So it's all about the money. Whatever it is that you are doing should be making you money. And what I want to say that's great about working with home builders is that many builder LOs do over 10 loans a month on just any given time of the year, good market, bad market. It's very consistent loan volume. And when you look at an average new build loan amount of $400,000, $300, that's nearly $50 million in production just in doing those 10 loans a month. So it doesn't take a lot of builders in order to get to that point. It just takes that dedication and sort of doing the work, finding the opportunities, and then really learning how to be a good builder loan officer. And then I've got a new bonus reason for you. This is new to my slide, and maybe one of the most important reasons I think of working with home builders is the new NAR settlement. Builders have mixed opinions on real estate agents. Some are very pro realtor and some are happy to save the co-broke. But I will tell you across the board that home builders spend about as much money on co-brokes as they do on marketing. And so eliminating that first-time home buyer co-broke in order to reach that consumer directly will not only be attractive to a first-time home buyer who now no longer has to pay that 2.5% or 3% to a real estate agent, but they're also able to go directly to the builder and still feel represented. So either way, if you're a builder that wants to be pro realtor, as I mentioned, there are a lot of them that are, but there are still a lot that are happy to save that co-broke and then market directly to the consumer. But I think either way, the point here is that builders have the stronger ability to market to buyers directly, which would quote unquote save the consumer that buyer agent commission. And I think particularly that is helpful for two demographics. Number one is that first time home buyer. We know how hard it is already just to save the 3.5% for a down payment. If you're asked to now save another 2.5% to pay a real estate agent, that's going to be hardship for especially a marginalized home buyer. I think with the move-up buyer, you're also going to see that. I think the move-up buyer is perhaps the most highly impacted on the NAR settlement because they may end up eating the cost of compensating the buyer's agent as part of seller concessions. So they will still very well pay 6% to sell their house. But then when they go to buy the luxury property or the move-up property, that seller may not be as willing to cover that 2.5% or 3% to the buyer's agent representing them. So in a lot of times, we sort of are predicting that move-up buyer may end up paying 9% to sell and buy another home. And that could be a deterrent in order for them to be able to list their house, and that will further exacerbate inventory issues. So just something to sort of think about as we all get our feet wet in terms of the NAR settlement. Now, if you are going to market to builders, as I mentioned before, there are 5 essential things that you need to be able to know and discuss in order to do that. And I want to help you sort of get educated and understand how to do that. So number 1, the current builder lenders, the current builder market landscape. You've got to be able to sort of talk the talk. Number 2, how to discover the right builders to target in your area. Number 3, prospecting strategies. Are you trying to become a turn down lender? Are you trying to become a preferred lender? And what does that actually look like? Number 4, the power of proprietary, understanding what you have in your loan toolbox that might make the difference. And then number 5, the importance of knowing where you are in order to get to where you want to be. And so let's break these down, starting with understanding the current market landscape. So volatility, I think, is here for the foreseeable future in terms of market and mortgage rates. Obviously, what drives mortgage rates? Well, we know, obviously, the Fed, we're hoping for 1, maybe 2 rate cuts this year. We started off thinking there were going to be 6 to 7. So that certainly had a little bit of an impact. Other policy or what's happening in the globe in terms of, the war in the Middle East or what's happening in Ukraine, certainly that will have an effect on rates. Any auctions that are happening in the bond market. We've got 2 that are happening today. We've got inflation that we obviously think is problematic, and we still struggle with that, even though we're getting close to that sort of 2%. Expectations of where the economy is going, the number of active investors in the market, alternative investment opportunities, and then just overall market dysfunction, I think, is one that is a big part of it. When we look at sort of the spread between the 30-year fixed and the 10-year, it's something that's been problematic. Typically, we're looking at a 1.7, and we're just not there right now. If the spread, however, were to normalize back to those historical spreads of 1.7, we would have lower rates. The good news is they're getting better. At one point, I think we were in the 3s in terms of spread. So it's getting a little bit better, but we're just not there where we need to be in order to get rates into the 6s at this point. I will say, in terms of marketing, understand that opportunity still exists in the marketplace, but it is not business as usual. Builder applications for new homes are up 13%. You can see that in resale and in refinances, they've really been struggling. So the new build application survey is very strong, again, with those double-digit increases, and we're seeing particular movement in the FHA space. Again, builders are willing to sort of buy that rate down. The average home builder is really buying the rate down to about 5.5% right now. And so because they're well capitalized and able to do that, I think that sort of explains why you're seeing the surge in the FHA buyer space in new home construction. If we look at sort of what that split actually looks like in terms of conventional and government business, we can see that in May, 63.4% of new home applications were conventional loans, 26.5% was FHA, VA just under 10%, and then that rural and USDA at about 0.3% of new home applications in that split. But it is a unique period of time. Builders have the ability right now to compete with the resale market in terms of quick move-in inventory or spec homes that are up year over year. They're also able to work with the more discerning buyer. So 75% of builders that we talk to say that cycle times are down to 4 to 7 months. So that's something that's very attractive to that discerning buyer. And then they're also able to help the affordability challenge buyer by buying those rates down and getting people off of the sidelines. I wanted to take in case in point Austin. Last year, our numbers showed that the new home market captured 41% of all purchase closings in 2023. 41%, that's almost half. So again, if you're a lender in Austin and you're not working with home builders, you're essentially cutting your ability to do purchase loans in nearly half. 41% of that business is going to new construction. So again, want to keep and open your eyes on what the environment is, and it definitely is builder centric. Why? New home sales are resilient. Limited quality competition exists from the resale market. Again, check your MLSs. The things that are moving quickly are typically remodeled, new, and gray areas. Stuff that needs work is definitely sitting. Use of incentives by builders, especially those mortgage rate buy downs, are very impactful. We've also seen that due to price increases in the resale market, and then builders have been getting lumber prices down and some of that labor market issues tightened, you're seeing this narrowing of the price spread between new and existing homes. So it's not nearly as expensive as it used to be in terms of comparison to buy new versus existing anymore. Also, the growing share of cash buyers in the market is absolutely unfazed by rising rates. In fact, we are at the highest penetration of cash transaction buyers in the country right now. The last I checked, it was somewhere around 34% of all transactions were cash buyers. So they definitely are able to buy when they want to, no matter what the interest rate is. And then I think lastly, it's important to sort of see, and I think this is why we are sort of starting to see resale inventory tick up a little bit more than what we did in the past, is that there is this sort of begrudging acceptance from consumers that low interest rates are a thing of the past. And if we look at over mortgage rates over the last 20 years, we really are sort of in that 6-ish range in terms of where that average sits. But if you look at this graph on the right, you'll see when we talk to home builders and we ask them sort of, what is your feeling about competition from the resale market? And you can see Texas in blue, and then Florida, who's another big market, in the red in comparison to the rest of the United States in yellow. You're seeing that 44% of Texas home builders are saying that they get very little competition from resale. Another 40% say that they get a little competition from resale, and then only 16% say that they see resale as even moderate competition. So again, builders feel very confident in their ability to navigate right now through the resale market. Why? I think a lot of that has to do with incentives. And for the consumer, incentives target two of our main issues. It's fear and affordability. So if we look at the graph on the left, you'll see that the percent of quick move-in projects with some sort of incentive, right? And you can see some different markets across the country, but you'll notice that in Austin, for example, you know, almost 70% of projects with quick move-in inventory are offering incentives. And again, as I said before, if you look at what builders are offering, if they are offering mortgage rate buy downs, what are they willing to pay for and able to get for fixed rate? And you're seeing, you know, mid fives, high fives is sort of, you know, that a range of area of where builders are able to buy that rate down. So again, very significant, but also incredibly helpful for you as lenders to be able to leverage the incentives that builders are offering in order to get buyers off of the sideline. Now, when we talk about the overall state of the market, when we also talk to our home builders, we can see in the US versus Texas and then Florida, they are seeing, you know, a little bit of a slowdown. Again, the vast majority are saying it's slower than expected, but it's not worrisome. Some are saying a little over 20% that it's slower than expected and causing concern. And again, I think some of that is related to quick move-in inventory. So you may start seeing a little bit, some builders a little bit more slow to sort of release inventory until things sort of catch up. Because one of the things that we know is that as soon as rates do drop to the 6s or even high 5s, you're going to see the market become flooded with potential home buyers that were sort of willing and waiting to buy when rates got to sort of a more attractive point. I mean, once that happens, you're going to see this feeding frenzy in the market where you're overbidding and driving those prices back up. So certainly something to watch as well. But I do want to say that higher mortgage rates sort of impact buyers differently. When we look at the top buyers in the new home market so far this year, interestingly enough, despite lock-in effect, the #1 buyer of new construction is that move-up buyer. And why are they the #1 buyer demographic? Well, mostly because of the fact, again, that they have this equity that they can tap into, buy another house, and then rent the one that they have out in order to be able to subsidize the higher cost of that mortgage payment. Now, interesting sort of note on this is that the effect of them sort of buying another house while renting their current house out is that it's exacerbating the supply problem. They're taking another house off of the market without putting one on. So again, I think it's important to note that that move-up buyer, when they don't sell their house, is potentially problematic on the supply in the marketplace. Number two is entry level. And again, I think as rates slow a little bit or lower, we will get to see that move up. But again, looking at that new home construction application survey, we'll see that FHA buyer is a much higher percentage than what they have been in the past. And again, that is due to the fact that builders are able and willing to buy that rate down to where it's affordable. Number three is relocation. Obviously, if a job is going to move you, I think that's significant. Number four is luxury, and then number five is active adult. Now, some are buying purely off of salary, but many of those that are active today have other factors as well. Number one is long-term savings. You know, the personal savings rate averaged 7% from 2010 to early 2020. Gains from the stock market have absolutely been significant. The S&P 500 is up 50% in 5 years and nearly 170% in the last 10 years. And then very important to note is this sort of generational transfer of wealth. So there was a Merrill Lynch wealth management poll that asked about distribution of wealth to their heirs and basically found that 65% of the older generation is willing to give some of their money away while they're still living. 27% plan to give it away after passing away, and then 8% plan to give it all away while they're still alive. And so to note that only 1 out of 4 are waiting to give it away after they pass is definitely a shift in terms of how my grandparents were. So I was sharing a little bit earlier with Stephen that, you know, my mom has chosen to give all of her grandkids money to be able to put a down payment on a home. And that's not something that I know my grandparents did. And so I think seeing your grandchildren or your children be able to purchase a home while they're alive is something that this generation feels is important and meaningful as they live their lives. Now, I want to sort of talk a little bit now and pivot into how you sort of have strategy to deal with some of these different buyer demographics. So number one, if you've got a move up buyer, like what are your HELOC and cash out programs? You should absolutely know what those are in your back pocket. So be able to discuss with a home builder, like I've got some great HELOC and cash out programs that are going to be able to help sort of get those move up buyers out of the house that they're in and into one of yours. So know those strategies. I think equity is important to be able to discuss. A recent CoreLogic study said that the average mortgage holder across the country has $300,000 of untapped equity that's sitting there, and that's certainly enough to be able to leverage in order to get a down payment on a new home. What is your strategy for renters? Well, affordability solutions and buyer education programs are key. You know, we just looked at some research that said that the rent versus own debate is alive and well. Less than 8% of our residents who moved out bought a home as a reason to depart in 2023, which is the lowest we have seen since we started tracking the number, and that's through EQR. I think it's very interesting to note that the affordability is so low that only 8% of residents who rented stated that because they were leaving because they had bought a home. So certainly rates are a big piece of that as well. And then know your baby boomer strategy. You know, last year, baby boomers overtook millennials as the largest home buyer generation. Now this year it's sort of flipped so far back to those millennials, but the baby boomers are still buying. Important things to know why they're buying is number one, we have a baby chaser index, and certainly Texas is a big one where baby chasers are boomers who are sort of moving to follow their grandbabies, right? So Texas is a big place for that. If you are trying to get into that baby boomer market, reverse mortgages for purchase are absolutely critical. If you've got them, learn about how to do them, and then market those to home builders, particularly home builders who are building age-restricted communities, because there's certainly a need for that as well. But I think the bottom line is that, the new home market is going to remain a dominant player. The big difference is really those inventory issues and then also incentives. Mortgage companies and originators need a builder strategy if you want to survive. And we are definitely here to help you with that. If you want to take a quick screenshot of this, I'm happy to be able to share that with you, but I think it's important to really know what is in your mortgage toolbox in order to be able to provide solutions for home builders. Again, baby boomers, just to sort of recap, really tap into that historically high equity by offering reverse for purchase programs, particularly in states like Florida, Arizona, Texas, Nevada, California, which have high concentrations of age-restricted communities and retired folks. Number two, those move-up buyers, HELOCs, closed-end seconds, really allow the segment to sort of keep that free money mortgage while also tapping into the equity to buy the house that they really want. Again, rent accrued really sort of allows them to subsidize the higher cost mortgage with that higher interest rate. Number three, first-time home buyers. I think everybody right now is watching the HEI space. Home equity investors really allow these buyers to get the home that they want, or in some cases, a lot of these first-time home buyers don't want a starter home. They want to move into their forever home right away. And home equity investors are really a piece of that. They're allowed to sort of help that buyer keep the mortgage payment low while buying a bigger house, simply by allowing them to share in the equity. Also, if you are a bank and you've got great products with LMI or MMCT tracks, again, these are really important pieces that you should be able to talk about with a builder because there is a great need in those communities. And I will note that zero down programs are absolutely making a comeback. So whatever people need to do in order to help buyers get into homes, I think banks and brokers are really looking to be successful with some of those zero down and affordability challenged programs. I do want to note that still in style are forward commitments and rate buy downs. So make sure that you are educating yourself about those as well. Now let's jump into how to discover the right builders and subdivisions to target in your area. Number one, I think it's important to really do your research. So many people, I think, tackle home builders just getting in a car and not really understanding what the need is or the story behind the home builder. So you've really got to learn the story, learn what lenders they're already working with, and then align with builders in your bucket. So for example, every mortgage company or bank sort of has niche programs where they find success. Now for me, I never really had great jumbo products. So I was never gonna maybe go market a Toll Brother because I didn't necessarily have product that was going to help me win deals there. But you know what? I had great product for credit challenge buyers. I had great first-time home buyer products. So I was always going to try to find builders that had buyers that fit programs where I was going to win deals. So know what you do well and then align yourself with builders in your bucket. Know your strategy. Are you trying to become a turn down lender or are you trying to become a preferred lender? And what does that look like? And we'll jump into that a little bit more in a following slide. If you are a Zonda Mortgage Pro customer, make sure you are leveraging the builder capture detail function in order to quickly identify builders who do not have a solid lender relationship. Our product has a one-click solution which will allow you to sort of generate a leads list of builders that don't really have a solid lender relationship in any particular market. Your HBA, your BIA, NAHB, it's not enough just to join and show up to a breakfast. Like, you want to get involved, join a committee, really sort of be valuable, find out how you can bring value and really start proving yourself by showing that you are a partner in its truest form. Also, attend your local Zonda briefings. If you are a member, we have the best builder audience that is out there. So if you want to meet decision makers and really immerse yourself in the builder community, I can tell you that our events and briefings are where you want to be. And it does allow you a lot of exclusivity because it is open to members only. And again, I think always with sales, right? It's consistency over creativity every single time. I think showing up sometimes is the hardest part. A lot of loan officers that I talk to struggle in saying, well, what do I say when I go in there? What do I do? And it's just show up, right? Ask questions, learn about the community, and then provide value. Really know your loan programs, know where you can help them make more money. I mentioned earlier that we have several different events. There are some that are open to the public, so I would encourage you to visit our website at zondahome.com/events for a complete list of all of the events and networking opportunities that we have for both sponsorship partners and attendees. Number 3, we're going to dive into strategy a little bit. Are you trying to become a turn down lender, or are you wanting to become a preferred lender? And what is the difference? So a turn down lender is really that national or large builder, which typically has their own mortgage company or a joint venture. There's still a lot of opportunity that works in that space, but the one thing that I do always say is respect the home builder and their own mortgage company first and foremost. We never are in it to try to steal business away from a builder's own mortgage company. That will get you right out the door quickly. So it's stealing essentially from their pie. But you are there to be able to help supplement, and trust me, there are a lot of opportunities to be able to do that. Preferred lending is a little bit different. Those are really going to be those small to mid-sized level builders which rely on us as lenders to fill the voids with technology, marketing, exposure. You're really going to do more than just process loans. And I think there's space somewhere in between sometimes with both. But let's talk a little bit about prospecting turn down and how you do that. So number 1, you're going to start by, again, doing the research, creating that target list. Now, once you create that target list, you're going to visit those nearby subdivisions weekly. You're going to ask the sales agent ahead of time what the best day of the week and time it is for you to show up, and then you're just going to show up, right? Determine the financing needs of that subdivision. What niche programs can you offer in order to be able to be a hero? And then you're going to pair that program offering with the need of the subdivision. So do they need permanent buy downs? Do they need extended rate locks? Maybe, for example, you've got a product that allows you to go to 150% of area median income. What I would do in that case is I would go to an outskirt area and say, hey, listen, how many buyers did you lose last month because they make too much money to qualify for a traditional bond program, right? So now you're basically allowed to go in and say, I am providing you a solution for all of those people that you just turned down. Again, know your products, really become a creative loan technician, and then provide solutions. And I'm promising you that there is a need for that, and it's a win-win. Consistency, again, over creativity every single time. And then ask for the business. What can it hurt? I think one of the things that we all can be better at is asking for the business. It's not enough just to sort of show up every week and then just hope they give you something. Don't be afraid to say, listen, gas is expensive. It takes me an hour and a half every day to drive down here, once a week. Just give me a bone. Let me show you how much I want to be a good partner to you. And I think human nature really is that if you keep showing up and if you provide value, we want to help each other. We want to reward hard work. So, what they expect from you is to show up 3 times, and then if you don't get any deals, stop showing up. I think what you need to do is know it's a long haul. Show up for 9 weeks, 10 weeks, 12 weeks, go for 3 months and 90 days and show up and ask for your chance and really prove yourself, because that's what most people aren't willing to do. And again, the difference between millionaires and non-millionaires is simply the dedication to do the things that the non-millionaires aren't willing to do. So show up, you go, 9 weeks, 12 weeks, once a week, and really create that relationship and provide value. Now, if you're going to prospect for preferred, again, those are those small to mid-tier level builders. Marketing here or technology is going to make the difference. Uncover their pain points. How can I help you? Do you need, exposure through social media or BombBomb or some of the different tools that you might have access to. Really help them sort of get their name out there and be a partner there. Respect the blood, sweat, and tears. I cannot emphasize this enough. Particularly with these small to mid-sized level builders, they all have a story to tell. Some of them are multi-generational builders where maybe it started with their great grandfather and they've been able to sort of exist through good markets, bad markets, COVID, supply chain issues, labor shortages, legal entitlements are certainly costly. So being able to sort of understand their story before you even have a conversation so that you can speak to the value that you provide. I think a lot of times with home builders, they're turned off if you come in with your Mercedes and you're just talking to them about all these different things that you can do to help them without understanding all it took for them just to get to the point for you to be able to even offer an end loan. Sometimes these land deals and are an entitlement for up to 10 years, right? Or then we have pandemics and we've got interest rates being high and they're just trying to compete with some of the national guys. Like really understanding their story and making sure that they understand, more importantly, that and value that what it took for them to get to the point for you just to be able to take care of their loan goes a really long way. So humble yourself to what their pain points are and really be part of that solution. And then of course, for our Zonda members, you're going to want to leverage the builder capture detail function within Mortgage Pro in order to help uncover builders without a solid preferred lender relationship. So, okay, great. Whether it's turned down, whether it's preferred, you've earned your first deal. Now what? Well, first, don't panic, breathe. Just take great care of it. Word spreads. One of the things that you'll see with home builders is that if you are approved and do a great job in one subdivision, you're very quickly going to be added to other subdivisions. And I'll tell you how this happens is it happens through things that are organic, like a pipeline call. Maybe for example, I used the AMI example beforehand, and you're going around to the different sales agents and they say, update me on your pipeline. You say, well, this one fell out because they just got a new job and now they make too much money to qualify for that bond program. And then all of a sudden the person across the table says, oh, well, you need to call Nicollette. She's got a program that actually allows you to exceed AMI by 150%. Oh my gosh, that's great. And all of a sudden now everyone at the agency knows what you offer. So again, you've earned your first deal, just take really great care of it. Under promise, over deliver, and just repeat. But I want to simplify this for you. In terms of prospecting strategies, what is the end game? Let's dumb it down and keep it simple. So number one, visit subdivisions, visit them weekly, show up, have something to be able to discuss a value that's meaningful to them. Know mortgage rates, talk about programs that might be, available for their particular subdivision. Ask a lot of questions. And, one of the things that my grandma would say that sometimes I struggle with is, listen more, talk less. You have two ears and one mouth. So ask questions, let them speak to what their challenges are, and they're generally going to give you that sales roadmap by sharing, what their issues and concerns are. Then you're going to earn your first few deals. Do a really good job on those deals. Again, under promise, over deliver. Always close on time, right? Over communicate, communicate, communicate. Leverage a positive experience on those first few deals in order to obtain a meeting with the sales manager. Really leveraging, again, those positive experiences and sort of the backing of that sales agent, because every sales manager is going to trust their sales agents and wants their sales agents to be empowered to be able to sell more homes, right? But that final goal of really being, getting on that preferred lender list so that the builder will release incentives to you once, you're the lender of record. Number four, let's talk a little bit about the power of proprietary. Builders love niche programs. Permanent rate buy downs are by far the most attractive solution right now. Believe it or not, they're not widely available. A lot of companies have, 2-1 buy downs or 3-2-1 buy downs, but those are not nearly as valued to home builders and really buyers as sort of the security of that permanent rate buy down. But anything that is going to also help with affordability solutions is much needed. I would also say know what your marketing programs that you have in-house. Like, how can you help them drive exposure? How can you help them scale closings? How can you help them get transparency into pipeline? And then lastly, leverage Zonda and what we have in order to help know the market and educate. We also have the ability to help provide you with detailed market information that you can be able to discuss, with your home builder. So if you're interested in sort of really getting the updates on your individual market so that you can share that with not just builders, but also your real estate customers, please reach out to Bryan Walker directly and ask him about our market reports, as well as our national housing outlook. It's called ZNO. It's our Zonda National Outlook product that is spearheaded by our chief economist, Ali Wolf. And a lot of the information that you saw earlier is available through our Zonda National Outlook product. And then lastly, I think this is an important piece, but it's small but mighty. Understanding where you are in order to get to where you want to be. And I think the biggest mistake that loan officers make once they have become sort of a preferred lender is thinking that now the work is done and the contract's going to start rolling in and it's just money in the bank. And I think the reality is that builders are always being marketed just like realtors. You can't read their minds. You might think everything is great, but maybe, they don't feel communication has been right, or maybe someone else is sort of coming in and trying to offer a better product that maybe you didn't know about. You've got to monitor your market share down to that subdivision level. I always recommend looking at a rolling 30-day, 60-day, 90-day basis to say, where are we winning business? Is our trajectory going up, or are we losing deals? Or if we've got a great relationship with a home builder, maybe we're not capturing all that we should be in, a couple of subdivisions. So I think it's really important to understand where you are and be able to have transparent conversations, because sometimes you think you're doing better than you are and you want to save that relationship before it's not savable. So let's, in recap, sort of talk about some key indicators and common business challenges that if you're going to work with home builders, you should be aware of. Number one, how do I identify my builder leads? Number two, what market should I target? What is my competition doing? What's my market share? What is the remaining opportunity in a subdivision, right? I mean, the last thing you want to do is invest all of this time marketing a subdivision only to find out that they only have 2 houses left to sell. What projects are coming in the future? How can I forecast more effectively or build our brand and network? For leaders in the market, how do I recruit top purchase performers in order to build a builder division? These are all solutions that we have at Zonda to help you secure more builder business. We do that by helping loan officers and lenders identify opportunities to build partnerships and increase their market share, connect directly with top builder decision makers nationwide, and then grow your network in the new home space. And with that, I will open it up to Q&A. Before I do so, I will put our contact slide on there. Please do connect and follow us. Both Bryan and I are very active on LinkedIn in terms of sharing information about the new construction market, as well as market updates. With that, I will open it up for questions.
Thank you, Nicollette. Very informative as always. I do have a couple questions here. I'm going to consolidate some of them just for time's sake. Sure. One of the questions is, what is Mortgage Pro and Builder Capture Detail, and how do you determine that a builder does not have a preferred lender?
It's a very good question. So, well, for starters, we're always available to show you product and dive into your market. So again, I would encourage people to reach out to Bryan directly in order to sort of see it in action. But essentially, we gathered deed data in from all of the counties across the country nightly. We then basically take that deed data, we scrub it over the course of a week. In fact, we spend almost 200,000 hours a year really scrubbing the deeds so they match up properly to the right lender of record, the right builder of record. And then we put it into our own proprietary algorithms that help you show the percentage of business down to that subdivision level that each lender is getting from each particular builder.
Great. Another question is, how do I compete with an in-house lender with incentives?
It's a really hard thing to do. I will tell you, builders are buying that rate down to 5.5%, as you saw. And so my biggest suggestion would be, don't try to compete with a turn down. Try to create your own builder relationships, or provide an alternate solution that that preferred lender doesn't have in order to get those deals done. But I always say, if you can't beat them, join them. It's hard to do, though.
Perfect. Thank you. I think I pretty much consolidated all of the questions. If there are any more, just shoot me a message in chat. You can also email me at bwalker@zondahome.com. I'm going to give it just a few minutes just to make sure that nobody has them before closing remarks. All right. Well, thank you, Nicollette, for sharing your knowledge with us, and thank you for attending and spending time with us today. TMBA continues to work on bringing you great webinars like this one. Please check out the homepage at texasmbna.org for the upcoming schedule, and watch for those emails from TMBA reminding you to register. Thanks again, everybody, and have a great day and a great weekend to come.
Bye-bye, everyone.